Good afternoon and welcome to our second edition of our Inside ProCents educational webinar series. You have most likely seen some of our Inside ProCents videos on LinkedIn or in your email inbox, each one designed to focus on our individual members while also providing context for the value provided by ProCents directly from our members' lips. These will continue, so keep your eyes peeled. This new educational webinar series, however, has a very special focus. These webinars are designed to help our members understand the unique aspects of the support services and products that our ProCents sellers are providing. Each selected presentation is designed to shine a light on the tools and/or solutions that are unique to each seller and that can be leveraged for greater growth-related opportunities by both buyers and sellers and distributors within our ProCents environment. As always, our focus is on our members' ultimate ability to succeed. My name is Devin Anderson, and I am the president here at ProCents. And once again, I am joined by the rest of our leadership team, Mr. J.R. Edens, a ProCents partner, and our CEO, Mr. Matt Russell. Matt, would you like to say a few words before we begin?
Absolutely. Well, the 179D and the tax incentives or tax depreciation program is one of the things that I believe that is fundamental for every business to look at and incorporate on a large majority of their projects. Hopefully with this series all the information that you're going to gain from Randy today, you will see why it's a benefit and how it can get more business closed for you. But I'm just super excited. So Randy, looking forward to it, buddy.
Right on. Thank you,
sir. So much.
And now,
Matt, Devin. Oh, go ahead.
Yeah.
Sorry.
Sorry. On to today's event. Today we are featuring one of our ProCents sellers within the ProCents environment, ready to provide context and knowledge around two selling initiatives that I believe everyone can leverage: Section 179D and Accelerated Tax Depreciation. Please welcome our ProCents seller, Mr. Randy Lucas of Lucas Tax and Energy Consultants. Good morning, Randy, and welcome to Inside ProCents Educational Webinar Series.
Thank you so much. I really appreciate it. Glad to be here. Good to be with you all. And for those of you joining this on a recording, good morning, good afternoon, good evening. Thank you for the time here. I also want to thank ProCents for the opportunity to schedule this after tax day or tax busy season is over. But I've following up on the presentation we had last month from Ross Rita, and it's similar to this. This will be a kind of interactive discussion, and want to introduce some concepts for those of you who are somewhat familiar with these, but also if you're not familiar, kind of give you an update on what's available. As was said earlier, Matt said earlier, to really drive home the projects, really distinguish yourself in the marketplace, your company, and your proposals out in the marketplace, because you are tuned in to these incentives as they do apply to your projects. Next slide, Matt.
All right. Real
Devin,
quick.
Next slide, Devin. Sorry.
Yeah. No worries. Just a real quick note to everybody out there. Make sure you mute your screen. We've got a couple of people still open. Just want to make sure that we don't have any background noise as Randy's moving forward. We'll do a Q&A at the end. There is a text box if you want to go ahead and pop in questions before we get there, and I'll call on you at the end. All right, Randy, let me go ahead and get this party started.
So this is just a little introduction. Lucas Tax and Energy has been in business since 2009. We are a firm that specializes in these energy related incentives. They're not all tax incentives. We'll touch on that briefly later in the presentation, but I have been involved with a number of organizations and working towards improving our sustainability and energy efficiency. I'm a native of Richmond, Virginia, but based in Charlotte, North Carolina, and a proud graduate of Virginia Tech. That last bullet is probably the most important thing on there. Go Hokies. Next slide. So these slides you're going to see coming up next, these are just some pictures of some of our past projects. You can see a variety of building types there, really good lighting in these projects. And of course, those do have incentives that are tied with those. Next slide. And this building on the right in the lower, that's a parking garage. We'll talk about that. The tax code does recognize parking garages as buildings for the 179D deduction. We talk about that in a minute. Next slide. And these are just some others. We do look at the entire building. So to focus on the lighting, but we can model the entire building, or if there's just an HVAC or a chiller upgrade, we could do that. But every building has a story and a building type. Next slide. These are just more slides. This is pictures from a really cool project we did in 2020. This is the expansion and renovation to a couple of the terminals at the Charlotte Douglas Airport. So they expanded one terminal, and we worked with the architects for that project to capture the 179D. And we'll talk about working with municipal buildings and how this could be a benefit directly to your companies. Next slide. So what I'm going to do today is, as Devin said, we're just kind of talk through these incentives and how they go. We definitely want to capture your questions and any anything you want to go over further in detail at the end. But I would say just we'll keep this at a high level. We'll make sure you get a copy of this for sure. But I tend to not talk too much into the weeds of the details of the code section, and just kind of talk more at a higher level. So you'll see, we'll go through this. We'll spend probably most of our time on this first one, the 179D deduction. But at the end of the section, you'll see kind of the main takeaways, and that some of the key things to highlight on. These pictures are from a recent project we did, a series of apartment complexes. Love apartment complexes. They are great for this deduction. They're large, and typically the more modern, the more likely they're going to have modern lighting and modern heating and cooling systems. Next slide. So first topic, or the first incentive that I want to go over, is the energy efficient commercial buildings deduction. It's section 179D, cap D. It is sometimes referred to in the industry and the culture as the EPAC deduction, because it came out of the Energy Policy Act of 2005. The actual Energy Policy Act covered a lot of other things, but it did establish this deduction back in 2005 when it was passed. And it kept having a period where it would be available, and then Congress would have to reenact it or extend it over and over and over. And then finally in 2020, they permanently extended this deduction. So there was some frustration in the industry, and understandable, because some years it wasn't available, or you may have a project you're completing and you're still having to wait until the end of the year to find out if Congress is going to extend it. And by that time, you've moved on to your next prospect. But it is permanently in the tax code now. So all of that's behind us. We could definitely focus on including this in your projects and really embedding this in the proposal. It's a one-time deduction for qualified commercial building property in the US. And again, it started in 2006, and Now, it's in there permanent, but this is a one-time deduction you can take for the energy efficiency. Next slide. So Section 179D allows a deduction that ranges from 60 cents to all the way, the maximum deduction is $1.80 a square foot. We typically can look at a building for all the maximum deduction, or we can look at just for a partial deduction of say 60 cents for lighting. I would say the majority of my projects are lighting projects, but as we saw in the case of the apartments, we did a full model on that and then qualified that for a full $1.80 a square foot, certified it. But it's designed, as it says in that third bullet, you want to encourage building owners to conserve energy and focus on reducing cost from electricity or energy usage in general. And energy efficiency doesn't get the shine that renewables or solar, and we do work in that space as well. But today, we're going to focus on energy efficiency in commercial buildings, but there is an incentive out there for this. Next slide. There's a list of some of the types of buildings, hotels, parking structures. I showed an example of that, multifamily housing. And so one thing on the apartments, they do need to be 4 stories or greater. That can include, if say, on the ground floor, you have a parking, kind of a underground parking, or, that's the first level. And then there's 3 above that, that would qualify. It works well with other real estate incentives, opportunity zones, et cetera. And then the last one, agriculture, greenhouses, they can be considered buildings as well. If you've got a good network in the agriculture community and you're dealing with somebody, with grow houses in the poultry space or something like that, lighting, you're upgrading the lighting in those, that could be a really good opportunity for 179D. Next slide. So they're capture the deduction and to determine what you're going to claim on the tax return, what the building owner is going to claim on the tax return. There are 4, I call it 4.5 methods to do this. Our target of what we're looking for in that second bullet, we're looking for an overall 50% efficiency reduction of the building project based on the industry standards, or based on the building type, set by the ASHRAE standards. The deduction focuses on these 3 areas: interior lighting, which there are 2 methods to assess that; the building mechanical system, which is the HVAC and the hot water system; and the building envelope, right? And so it's 4.5 because you can use this one method to model the entire building, to go look at all 3, and then you can look at each of these 3 individually. You can do modeling for that, and then we have another method for the lighting as well as an alternative method. It's basically lighting power density test, which is watts per square foot. When I'm only doing lighting only, that's pretty much the method that I will use. But all 3 or 4.5, all 4.5 methods are acceptable. Next slide. So 179D does require certification. I kind of chuckle because I've been around. I have seen where some buildings have tried to claim this deduction without the proper certification. We do not do that in our shop. We do the proper steps. We follow the guidelines. And as I do get the question, has it ever come up? And for a while now, it had not. But recently, earlier this year, the tax court did come down heavily on a firm that tried to claim it for 5 buildings that they did not do the proper certification. had really no basis for their claim or their deduction. We're not going to put any of your clients or customers in that position, put you in that position for your company or your customers. We are going to do the proper steps and the required certifications. And then the second point is that, yes, you can combine this with other deductions. So you can get upgrade a building, add the lighting, or it could be new construction and you're adding lighting and latest and greatest HVAC system, and you got the great insulation going on, and we can look at the 179D deduction as well as other deductions that or other incentives that may be available. This tax deduction is not going to block you from any other deductions you may also be eligible for. Next slide. So just wanted to take a moment here to highlight that Section 179D does offer a special rule or opportunity for architects, engineers, or designers to claim the deduction for publicly owned buildings. And by publicly owned, we mean government owned at all levels. It's the federal, state, or local level, and their subsidiaries or under their purview. So that could include your library or your county office buildings. Could include leased office space that may be one of the armed forces divisions or leasing space. That could be claimed. Of course, federal government buildings, state government, higher ed. We see a lot of this. This picture in the slide is a high school that one of my clients, they have a rolling contract with the county, and they've just basically been last 3 or 4 years have been upgrading all the schools with LED lighting. The project's going well, and they're able to claim the deduction for themselves on a building they don't own, but they are the designers. They provided the energy efficiency for that building, and therefore they're able to take the 179D claim on their own, the lighting company's own tax return. There are some additional steps, some additional documentation that needs to be required, and it can be shared amongst, say, you're doing a special project and you get hired by an architecture firm, you could share that. That project I showed you with the Charlotte Airport, that was claimed under this deduction, the special rule that I think three firms shared in that deduction because they were all part of the design of that energy efficiency. Next slide. Oh, I think I got a little ahead of myself. So this, what I just said basically is under the special rule, you can determine the primary designer or allocate the deduction amongst a team of designers. If you work with another company, the tax code is silent on how you allocate. You could choose amongst yourself, and not everybody may participate, even though they worked on the project. They could say, hey, no, we're not going to participate and claim this because we're, for whatever reason, a number of reasons, they may not be participating. And so again, it's not required. It's not, but it's an opportunity out there. That's it's really unique in the tax code to be able to upgrade a building that you don't own but take the deduction. And the reason for this is the government wanted to walk the talk. They wanted to encourage energy efficiency in the private sector. They wanted to demonstrate that they were doing the same, and this was one of the solutions to allow the designer to claim the deduction. So it's been really helping a lot of firms and finding new opportunities and working in these spaces. Next slide. So these next slides we're going to go through. I'm going to walk you through some of the numbers, just again at a high level, but I'm going to show you kind of some graphs on some past projects we worked on and show you the kind of the results and how it all worked out. So next slide. So what you're looking at, I've charted the project results from the modeling, the energy modeling that was done on this building. If we look at the graph on the there are two bars, you'll see one is kind of dark orange and one is kind of light orange. And then there's the three areas we talked about: interior lighting, mechanical system, and building envelope. So the dark orange represents the building standard. That's what we have to match up to meet for the energy efficiency. And then the lighter orange on the right is the actual results of our model. Okay, so everybody got that? It's 50% overall deduction, and it's broken up on these three areas. And then the IRS says, okay, our standard is that you've got to be 25% better than in energy efficiency. And our model, compared to the 25% for the interior lighting, showed 27%. Our mechanical system matched up perfectly, 15%. The standard's 15%. And then the building envelope, the standard is 10%. And our graph showed 12% of result from the model. So we were 3 for 3. And this, you can see on the right, there's a college classroom building. It's in Norfolk, Virginia. So again, this is a public building and 85,000 square feet. And the 179D deduction was $1.80 times the 85,000 square feet. So the designers, I think there were 2 firms involved in that project. They were able to, split that $153,000 deduction. For the energy efficiency on this building. So it's a great result. Next slide. So same sort of thing. We've got the standard on the left, and we've got our actual results on the right. And we've got a building that was office retail building with a parking garage. This was in Raleigh, North Carolina, 305,000 square feet. And when you look at the comparisons, the lighting fell short below the standard, and but the mechanical system was workhorse, and it was designed really well, very efficient systems for the mechanical. And then again, the building envelope fell a little short. And building envelope's kind of tough, especially on this particular building, because of the type of glass and how, just kind of its orientation to the sun. So there's a number of good things there. It's a well-designed building that, again, just fell a little short, but nonetheless, it still had a good outcome. We still got 1 out of 3. And you can see on the right in the blue box, the deduction, the 179D deduction on 305,000 square feet for the one component at 60 cents a square foot equal to $183,000. And this, I think this is in the private sector. So yeah, so this was a private building. But yeah, so this was a really good result. Our next one, next slide, please. So our next one is one of the famous ones in my practice. Was and it, you can see the result. It did fall short. It was an office and a laboratory that used a lot of heavy equipment, and the lab equipment plus the machinery in there really, really drained everything. It's a great building. I think it was even LEED, USGBC LEED building, or it had, it was well designed, but it just, for tax purposes, it fell a little short. And that picture there kind of represents how we were all feeling after the modeling was complete. So it does happen sometimes. We do diagnostics on the front end to try to mitigate that, and really haven't had that issue since. But I bear witness that it can happen, that you can do the modeling, and you do need to pass the test for the certification to claim the deduction. Next slide. So I think that, yeah, that wraps up everything for this first section. This others will go a lot faster, but the main takeaway from the 179D is that number one, is permanent. Now in the tax code, it's hardwired. They don't have a expiration date on there. Congress will have to, totally take the whole section out to do that. And so we're very confident for the next foreseeable future, this deduction's there. The range is 60 cents up to a max $1.80 a square foot. Now I'll put two little asterisks there. And the reason I put that there is because in the legislation that got proposed, I believe last year, that didn't pass the Senate, there was an effort to included in that legislation was a proposal to upgrade these to still three components, but $1 a square foot for each of the three, for a maximum deduction of $3 a square foot. So I'm just saying that to stay tuned, because if they do revisit that, it's possible they could pass that, and this could be increasing. But that, for now, we're still 60 cents to $1.80 a square foot. And again, there are a number of ways to certify and use the methods to capture the deduction. Next slide. So now we're going to go into depreciation, and the really two areas here that I want to highlight. But this first section we're going to talk about is bonus depreciation. That's a picture, a really cool project we worked on. It's a wind turbine, not wind turbine, a turbine factory here, not far from where I live in Charlotte. It's amazing work. See those lights that far away, that high up, really providing a great environment. It's just an incredible picture. Next slide. So the story on depreciation is that we've always had depreciation, but what's so special right now in 2022 is that we're still in a window of accelerated depreciation, and that came off of the number of efforts Congress has been using bonus depreciation or accelerated depreciation for certain assets to allow taxpayers to claim a little bit extra to encourage them to make the capital investments. And so right now we are still in the 100% acceleration period, and it's basically 100% in the first year. So if your customer invests $200,000 into a lighting upgrade, they can then take a deduction in year one of $200,000 rather than spreading it out over 5 years or 15 years, or depending on how they're using it in their business. It is scheduled at 100% through calendar year 2020. So this is a good leverage point to talk to some of your prospects or customers who, we're now in the second quarter. You don't want to, be too late to get a project underway, get off the fence, because you're risking the 100% accelerated depreciation. In 2023, it's going to go down to 80%, meaning that in that $200,000 example I just cited, you would claim in the first year, you'd claim 160,000, and then you'd have to depreciate that remaining 40,000 over that 5-year window. So this is a really good opportunity. And again, it does mesh with 179D because you're buying capital assets, and it's not just energy efficiency assets. This does apply to a number of things I think I'll talk about in the next slide. Next slide. Yeah, so qualifying that third bullet, qualified assets, anything that has a asset class life 20 years or lower or less, less than 20 years. Let's say it right. Less than 20 years. That can mean computers, equipment, lighting, land improvement, and again, anything that falls in between that. Buildings themselves fall outside of this because they have a 39-year tax, 39 and a half year tax depreciation, 39-year. Residential buildings that you own have a 27 and a half depreciation. And then, but what's interesting here, this does apply to leases. So you could have a leased property that they had to make a correction in the tax code because they left out leaseholds. So now, if your customer is, say, in retail or restaurant, and they go in and they upgrade their lighting in property that they're just leasing, they don't own the building, they can claim the bonus depreciation as well as the 179D. On the energy efficiency. So this is really good. Next slide. So again, the main takeaways from bonus depreciation is 100% for 2022. It applies to all asset classes 20 years or less. And actually, there's no limit on bonus depreciation. So maybe that's another third takeaway. There's no limit. So any size company can take advantage of that. In 2023, again, it does go down to 80% unless Congress extended. And there's some talk about doing that, but we'll have to kind of wait and see how that all plays out. I'll definitely, there's an update to that. I will definitely inform the group here. Next slide. So we're still talking about depreciation, but we're talking about now we're going to move into an alternative method of depreciation. And in fact, this is basically another mechanism that could provide the same answer, but it's instead of capitalizing and depreciating and worrying about which class it is, you can just elect to basically expense the asset. And so I think we were talking a little bit earlier before the recording. Some people use this for large vehicles and other assets, but yeah, this is another method I wanted to make sure you're aware of. It's a car dealership I was working with out on the West Coast, and they use this frequently before the pandemic, and then after during the pandemic, when they were kind of slow, they did a remodeling on their building and upgraded their lighting and HVAC systems, which they were able to take advantage of this deduction. So next slide. So 179 expense election, and let me pause here. So 179, and then just not a few minutes ago, I was talking about 179D. They are not the same thing, and I do apologize for the poor assembling and organizing in the tax code. Don't know who was responsible for putting these two incentives so close together and confusion, but this is just 179 that we're talking about. It's expense election, and it's an alternative to the bonus depreciation, but it doesn't apply to all taxpayers. You do have to do some other qualifications. It's really designed to small to mid-size taxpayers, but it allows a taxpayer to go ahead and just deduct the costs as an expense rather than, as I said before, capitalizing and depreciating. And one unique thing that it has, it really does allow upgrades to a commercial building, non-residential, of course, but does allow upgrades for the roofing, HVAC, fire and security systems. If some of your companies are starting to move in that area, this could be another incentive that you can look to that qualify as an expense under the 179 expense election. Next slide. So again, it was designed for small to mid-sized business. I've heard legendary tales that this was a effort from the agriculture to farm lobby to encourage farmers to upgrade their equipment and give them incentives to expense or write off, say, a new tractor or new piece of farm equipment. And every year, the maximum deduction under 179 increases slightly for cost of living adjustment. So the 2022 maximum deduction is $1,080,000, right? That's the amount you can claim under this expense election to say, hey, I'm going to just expense all this. I'm not going to worry about capitalizing. And the way the test they use to determine if you can qualify this is that your total assets, all your assets within a year have to be less than $2.7 million. So if you think of a company like Bank of America or Google or Apple, a large company like that, they may spend $2.7 million in a week on new assets or new purchases. So that they're not eligible to use this election. But you can think of a lot of other companies that would fall into this, my company included. I use this expense election a lot for new equipment. This laptop computer that I'm using for this to connect here online and to use this. I've used the 179 election on this, and it can include this leasehold property as well. That's what I was showing you about the car dealership example. So accelerated depreciation, and we got the expense election, and then that's good. Next slide. And again, the main takeaway here is for this alternative method, which would basically give you the same answer. In that example, I used $200,000 lighting project, assuming they're underneath that 2.7 limit, and for all their assets, yes, they could expense it, use this election, $200,000 expense, same answer as the depreciation expense of $200,000. You can't do both, but you get the same things. But number two does say you can combine this with 179D, and again, may provide the same result as bonus depreciation. Okay, so our fourth and last one for this afternoon. I appreciate you hanging in here. I wanted to talk, this is a unique incentive, but it had a lot of success here, and I wanted to highlight this. It's not in the tax code. So this is the USDA, the U.S. Department of Agriculture has a program called Rural Energy for America program, REAP, R-E-A-P, and they offer grants. They also offer loans for small businesses and small agriculture that is offered throughout the country. And one thing that's really unique about this is that, yeah, you see it's this is an incentive that's offered by the Department of Agriculture. And so people will normally just tend to think, well, this is only going to be available for farmers or someone, in the agriculture arena. And that's not the case. It's actually open for small businesses as well as agriculture. And so this is a picture of my client who owns this warehouse in Virginia. This is in a rural area of Virginia. And my client is the farthest thing from a farmer. But we do qualify as a small business, and the USDA defines a small business as net income average net income less than 5 million over the last 3 years. So I've worked with some large producers, dairy producers, and they have revenues in, you know, $35 million space, but after inventory and all their other costs, they, you know, they're nowhere near that level. They're in the qualified range, so they do qualify for this. So what it does is it provides a grant, and what we did was upgrade this warehouse that my client owns a warehouse, leased it to an unrelated party. And we went in and upgraded with LED lights throughout the warehouse. And we then applied, or before the project, we applied for a grant from the USDA, submitted all our application package. And you can go to the next slide. I think this next slide is it's the cover page of our application package. But we have to you know, provide this information to the USDA, and then they verified it, and they awarded a grant. Every state gets an allocation from the USDA, and this is a nationwide program and project in a rural area, and definitely wanted to highlight this because this is a really great program. Again, it's not in the tax code, it's actually under the Farm Bill, but it is well funded. And there are some states who don't use all their money, and then they actually end up sending it back to Washington, the USDA, and then they reallocate it and provide a kind of a second chance for some of the projects they want to fund in some states that, you know, didn't had more projects than funding. And then I've had that happen to me in Georgia. So it's a really good program. And again, it's 25% of the total project costs. I think that's on the next slide. Next slide. Yeah, that's what I'm going to show. So the grant is 25% up to the total project costs. The energy efficiency projects up to 1 million. That's the size of the project. And then renewable projects. So if you're looking at solar or some kind of geothermal system, that there are two different buckets basically that they'll fund projects, and the renewables are a little bit higher, 2 million. So again, the max grant would be 25% of that. Can combine these with other, it's available with other tax incentives, the 179D, the bonus depreciation, all the things we talked about before, plus utility rebates are available. Now, the USDA does this on an annual basis. And so the cycle just closed on March 31st. You can apply at any time during the year. You must apply before the project begins, because if you do it after the fact, the USDA will disqualify you. But got any projects that you know think might be in a rural area? Again, it can't be, you know, in downtown Los Angeles or Chicago or downtown New York City, but you know, there's a map that you can go in and apply enter the address, and the USDA will tell you it's based on census data whether your location is eligible for the REAP grant, and that's the first start. But we can apply at any time, and then the next funding cycle is the end of March 2023, and then it usually takes them about 6 weeks to process the applications and let you know if you are awarded. I have been doing REAP grants the last 10 years. I'm sorry, last 5 years. I've been doing about 10 a year. So that's where number 10 came from. But this is a really great opportunity, one to highlight in this energy efficiency space. Definitely can take advantage of it if you're in a rural area. All right, so next slide, we're going to wrap up here, bring it on home. So what should I be looking for? What I wanted to do in this section is just really tell you what Lucas Tax and Energy can do for you and your company. First of all, what you should be looking for now that well, especially 179D is permanent. And in 2022, you got 100% accelerated depreciation. You should really consider more buildings are eligible for these incentives than ruling them out. So I think everything should be considered or identified whether or not you can do this, and perhaps just fold it into your services, into your project, to say, hey, we're going to make your warehouse look great, upgrade this with better lighting, safer conditions, and oh, by the way, we're also going to give you the 179D certification, or verify that you do qualify for accelerated depreciation. That's what you should be looking for. Next slide. So this is a one-page summary that I will send out to the group. I'll give that to Devin and allow him to send that out to everybody. But this is just a one-page summary that we developed to help our colleagues in this space. When you're at a meeting and you get a question about it, this kind of gives you some of the key highlights, especially on 179D. It doesn't cover the others, but it gives you a little example and that kind of thing. Working to revamp this a little bit, so I'll be trying some different things on y'all just to see how you like it and get your feedback on it. But so I have this one-page summary. Next slide. And then what we wanted to do is kind of it's really a follow-up. I got this idea from Ross's presentation last month to talk about, what is the case sense for the buyers in the ProCents arena. So next slide. So what we can do, Lucas Tax and Energy, we can provide you with a estimate of the tax benefits of what's available. We do this at courtesy. So you can contact us, contact me, email me, call me. I prefer email because just give me the basics of the project and what you're looking to do. And
I think we lost Randy.
combining 179D with depreciation, it could account for X% of the project. And so this could be really good, beneficial to kind of done. Next slide. We'll also provide you with a one-page summary, and this is an example of a one-page summary that I provide. You don't need a 4 or 5 page explanation of the tax incentives and what matters, but we like to provide this on the front end as well to really outline that does qualify. We've reviewed the preliminary proposal. We've looked at this based on the square footage. Here's the estimated benefit, what you need to do to certify the building, and then we also include our consulting fees and what it'll cost to certify the building. While we're on that topic, just a high range. We do take it case by case, but if it's lighting only, you may be looking at 7 to 8 cents a square foot. If we have to do a full model, you're probably looking at 12 to 15 cents a square foot. Depending, again, we look at it case by case, but for our projects with ProCents, we have a minimum threshold of 50,000 square feet for the project, but you could have a combination of buildings that will add up to that. Especially that's definitely fine, something we consider. But these are two pieces of information that we'll give you on the front end to really tell you about the project, and then again you can kind of fold this into your proposal, and we have no problem being a subcontractor to your company. Some companies want to operate separately; they want their tax consulting separate and apart, and that's more than fine as well. And, we can operate accordingly. Next slide. thank y'all for hanging in here. I just got a few more things here. I know it's been a lot on an afternoon to talk taxes, and you all are brave. But I wanted to take a moment to kind of outline what I think is the ProCents way, the smart way to be a ProCents buyer. So as you see at the top, you identify the project. Next thing you want to do is call Ross Rita, because you want to get this project financed like we talked about last month. And those of you who didn't catch that one, you can watch the replay on that, but Ross can help you with that. Then you call me. And then you can see there, it's kind of small print, but you got your project finance and you got your tax incentives, and then you go on and complete the project. You have a happy customer, and then you become a superhero, super shero, and then repeat the process as many times as you want to. That's the smart way. Next slide. The not so smart way. Start at the top, say at the 1 o'clock, go it alone. Have an unhappy customer experience. It's not going to go well, so just suffer in silence for, give it half a day. Don't go a full day suffering. But then call Ross and me and proceed to the smart way cycle, and life will be good. And so that's pretty much all I had. Next slide. Oh yeah, this one, the questions we get a lot: how much time do I have to pursue these incentives? You have throughout the year. I mean, especially if it's a incentive that's going on the 2022 tax return, well, that year's not closed. And so we have plenty of time for those projects that were done last year, depending on when they're filing. Most companies may have extended, or they traditionally file in the summer, late summer or early fall. So we do have time to look at projects you did last year, and then how far back in time. You can go back, safely go back 3 years, possibly go back 5. And then again, there may be some cases where they have missed deductions in the past, and they can claim it again going forward in the future for this current proposal. Okay, next slide. So I'll open it up for any comments. I do have one other thing I wanted to highlight after this, but are there any questions, Devin, in the chat, or anybody?
Yeah, there's a
unmute
couple of them. Yeah, there's a couple
go ahead.
here. JR had one with regard to how long does a business need to be in existence and save for it to get approved for 179D?
It can happen in the first year. There may be some limits on a new entity, or let's say it's a new venture that's being started. But typically we can claim that in the first year. Same for the REAP grant. I've had entities who investors buy a new warehouse, and they just form the company, close 2 months later on the property, and then they're filing right away because they went in immediately, upgraded the lighting. So that's a great question. Any others? This is a picture of my dog, Energy, by the way, is company mascot.
Energy.
Yeah, I'm thankful that we haven't had any Amazon or FedEx delivery trucks, because you'd be hearing him in the background. But right now he's standing attention, he's all ears. So for your questions, and it's okay if you don't have those. I'll show you my contact info. You can copy that and reach out to me. Definitely want to hear from you on that. I know we're running short here on time, but any other questions, Devin?
Yeah, there are. There's a couple of them in here.
Please, yeah, go ahead.
So one of the questions from one of our controls guys, Mr. Tom Witter, he had asked in reference, because we actually have 2 people on the call that are dedicated to controls. So we noticed that the incentives mentioned HVAC and lighting. How do any of these incentives apply to controls?
Great question. Yeah. So yes, for definitely at 179D can be used because our modeling does take into account energy management systems and controls, and we can account for that as we do a model on the entire building. In fact, the apartment project used an energy management system, but just finished a project down in Bradenton, Florida, energy management system. So those controls for lighting, or it could be for the entire building, they could play a factor in that. And so, yeah, they're definitely in play. HVAC systems are in play. So yes to all of that.
Cool. JR had another question. Is there is there like a template or a basic incentive calculator that you have that people could utilize to see if they're in the game or not in the game, or is it just we better call you and make sure?
I think it's best to call me and make sure, but you can do a back of the envelope of 60 cents a square foot times times the square footage times the effective tax rate. And that gets a little tricky because corporations have a different tax rate than partnerships or pass-through S corps. So it just gives you an idea of what the size of the deduction is, and then what the after-tax value, because that's really what you want to know. You want to know what the cash value of the deduction is.
Right.
But yeah, you can estimate it. There used to be a really great estimator out on the web, the GE General Electric put together, but they took it down for some reason. I think they were scared of liability or something like that. But yeah, I would say reach out to me, and if you've got projects or ideas, we definitely want to hear about it. We go all over the country. I will turn to the audience, and I see my friend. Well, first of all, I want to thank Bill Fricker actually introduced me to ProCents, and so I'm grateful to him for the introduction and introducing me to Devin and Matt. But when I started looking into it, I saw CIB LED and Jim Oxley and his company was on. I've already been working with Jim, and so it's kind of nice. New people I knew there. So Jim, I don't know if you come off mute for a second, but you can just say a few words on how you kind of utilize these incentives, because you've been really successful in doing that.
Yeah, they've been really a great concept. It's amazing to me how many people, including large accounting firms, aren't even aware of it. A couple of ideas. I just made a presentation to a local business in Indianapolis. I was one of 12 quotes, and I was the only one that offered the 179D and 168K benefit. So I got the deal based on just introduction of that. Recently, we completed. Randy was just up here, and we certified 4 buildings. But recently, we did a large project.
I will say that it is not surprising. I've seen very even Fortune 50 companies that weren't quite aware of it. And part of the problem is that it's a one-time deduction, so a lot of preparers aren't comfortable with it, and they're not focused on it. And then there's some companies out there. We're not the only company doing this, only firm, but we are tax code based. Some of the other companies are more coming from the engineering side or the engineering modeling, and they don't understand the fully. Well, sometimes they struggle. Let's say it that way. Struggle with the tax concepts of it, and so. A lot of practitioners don't come up, or the facilities. Another scenario is the facilities person knows about it, but it's not getting to the C-suite, and they're not fully aware of it. The CFO, CEO is not aware of the incentive, and so it's a matter of educating. And we're here for it. We want to educate the ProCents members. We want to educate your prospects and your customers, and spread the word, especially since this is now permanent in the tax code. So thank you for that, Jim. I really appreciate it.
Yeah, just one other quick note. We just completed a large project, about 824,000 square foot. And with the local utility rebates and their impact 179 and 168K, they actually are making money, approximately $48,000 profit by doing the whole project. And you know, that they originally weren't interested in doing any of their offices or anything like that, but once we talked about it, we ended up doing the whole property. And Randy's also been very good about having conference calls, talking to either CPAs or building owners to help explain and understand it. So Randy is very easy to work with, and I would encourage you, if you're not using him, to reach out and start using his services, because it's added a lot of business to my company.
Right on. Yeah, you know, that cash positive piece, people don't talk about that enough. You're going to do a
It's
project.
such a great day to just sign the contract and bring in profits and have lowered utility bills, a safer warehouse. It's just, I don't see where you lose on that. It's just great. It's just great. So thank you for that.
Well, I think that's basically all we've got right now. It's all the time we have. We've been definitely taking people's time. We appreciate you guys sticking it out. It's definitely a topic that I think warranted the time, and probably warrants more time with you guys, you know, on an individual basis. So this can,
Devin, can you,
Yeah.
I'm sorry, real quick, can you go to the next slide? I just, I'll let you wrap up, but it really points to some of the other things you were mentioning about the other ProCents stuff. But go continue. That was all I had. I just wanted to show that last thing.
Yeah, that's great. I love that picture. It's got a lot of our videos and stuff for the Inside ProCents. It's good stuff.
Yeah,
All right.
I subscribed to it the other day, and there's a ton of really good videos out there that you can watch, and you guys do a great job with those, and those are all the links there, LinkedIn and everything else. So thank you for that. My contact's on the next slide.
Here, I'll push that one right now. There it is. And with
You
that,
take a picture.
Yep. With that, we will conclude. I will send this this PowerPoint presentation out to everybody anyway, so they'll have this at the, you know, at their fingertips. This concludes today's Inside ProCents educational webinar hosted by Mr. Randy Lucas of Lucas Tax and Energy Consultants. Thank you once again, Randy, for your time and for the information and this professional presentation. We really appreciate it. If any of you would like to ask any other questions of Randy, and I absolutely recommend that you do, or wish to dig into a project opportunity, you can see his email and cell phone or direct contact phone there on the slide. I will be sending these out as well, so you have a copy. Thank you all for spending the time with us today and supporting our ProCents environment. Winning is a team effort, and we here at ProCents are all proud to be working with each one of you. As always, we close with a quick reminder of our ProCents culture. Remember, success always begins with consistency. Get yourself and your organization fully connected. Be active, be responsive, always do what you say you're going to do. And remember to support the environment by always first turning inward to fulfill your organizational needs. ProCents opens doors, and our participants always choose their own path, but they do it together. Our team will be at Light Fair this year. All three of us, JR, Matt, and myself. We would love to meet all of you guys face to face if you're going to be there. So let us know if you're attending. We're actually going to be doing an event on Monday night. So if you're going to be in on Monday, let us know that as well, so we can get you on our calendar. Reach out to any one of us on the leadership team to make that happen. Thank you all once again, and have a great rest of the week.